being an entrepreneur sounds cool, but the reality of building a business is very, very difficult. Every level that you hit, there's a lot of things that suck that you just won't want to do. What you're capable of is on the other side. I don't feel like it.
And if you're committed to what it is that you're trying to do, nothing is going to stop you from getting there. Welcome back to another episode of Real Business Owners with myself, Trevor Cowley. Today we have an incredible guest. Rich Sommer is on the podcast. Welcome.
Trevor, I appreciate you having me on, man.
Yeah.
First time connecting in person.
Yeah.
I've listened to your podcast a handful of times. I've been following you on Instagram for quite some time, and I feel like I already know you, although this is the first time for us to formally meet.
He was an air traffic control guy for how many years? For quite some time, wasn't it?
Yeah, 11 years, FAA, air traffic controller.
So you were making good money. How does somebody, you know what I mean? Usually when you're making good money, you never want to take a step backwards. Was there a step backwards that you had to take? Like you had your money saved up, you were making good money, and you're like, dude, I'm going to do a completely different shift.
Yeah.
And I'm going to maybe have to take a step backwards financially in order to take 2 steps forward. Was that the case for you, or?
Good question. So I literally knew nothing about business, nothing about real estate investing.
Yeah.
And I was taught, like most people from a young age, to go to school, get good grades, go to
good
college,
job.
get a job. And I did all that. The one thing I did right when I was kind of going through college was I got a job in sales selling cell phones at the mall. This is back when not everyone had a cell phone yet. So I'm at the kiosk in the mall. I'm saying hi to strangers. I'm slanging cell phones. And so that was where I learned sales skills. Yeah. And then I became good at that. And some of my coworkers were like, hey, we're making a lot more money selling cars. So I went over and started selling Nissan. And that's what I did while I was going to college. And so I actually learned to really love sales. And I graduated in 2008. And the job economy, as you know, the entire real estate market was crashing.
Yeah.
And I wanted to go sell commercial real estate because I love sales. And I knew you could make a lot of money selling commercial real estate.
You're just seeing all these people. You're like, dude, I want to sell. One sell right there would make more than I can make in a year doing car sales.
100%, man. So I interviewed a couple brokerages, CBRE and Grubb & Ellis, and they were like, dude, we love your hustle, but it's 2008. This is not the good time.
We're laying people off, letting people go, not hiring.
Yeah. And so I found myself in a car lot wondering, what am I going to do? And the FAA did this hire.
I saw your post.
Yeah, they're doing it again right now.
Oh, your post.
And
so you found it off of like a social media thing, or a friend said, yo, check this out, or how did you find it?
Yeah, it was word of mouth.
Yeah.
And found out about this because no one grows up thinking, I want to be an air traffic controller. No, but most people don't even know what it is.
Yeah.
And so they had this hiring where they're literally hiring people off the streets. And they're doing it right now again. They're hiring 2,000 people off the street, no experience needed.
Why do you think that there's a...
Yeah, the reason is because when Ronald Reagan was president back in the 80s, the controllers did this big strike because of pay and conflict of interest. They did a strike, they didn't go into work. And so Reagan said, hey, whoever doesn't show up to work tomorrow is getting fired. So literally fired like half of the air traffic controller workforce back in the 80s. And so they did this big hiring back then. Well, all those guys and gals are aging out now. So there's a big group retiring.
Gotcha.
And that's why there's not enough controllers.
Yeah.
And there's a high washout rate. So like not everyone makes it through the program. There's a very high washout rate. So anyhow, I got hired. I did 11 years. And I knew nothing about business, nothing about real estate. And I overheard a coworker in the break room in between working airplanes talking about how he just closed on a fourplex in Cleveland. And I thought it was the coolest thing ever. And I was like, how did you do that? And so he was like, go read this book and listen to this podcast. It was the Bigger Pockets podcast on real estate investing. And I just became obsessed, dude. I was like, started listening to books. I started just binge listening to podcast episodes.
Did you buy courses and go through all that? Like
I didn't buy courses.
Real estate.
I didn't buy courses at the time, but I started going to real estate networking events, and I literally just like educated myself for like 9 months.
Yeah.
And I cashed out the only thing I had in my name at the time, which was a 401k. And I cashed that out, and I used.
Did you have to pay a bunch of penalties on that? Cashing it out?
I did. I paid a 10% penalty to the Fed.
Yeah.
I paid a 2.5% penalty to the state of California, and then the rest of it's taxed like ordinary income.
Yeah.
So I paid all that stuff, and then I leveraged it to buy my first couple deals. And but to answer your question, I did that on the side while working full time, 6 days a week as an air traffic controller. And once I had enough, like 80% of what I thought I needed in the real estate investing space in terms of cash flow and what I thought I needed to live on, that's when I made the decision to punch out and go all in. And once I went all in, I reallocated the 56 hours a week I was spending in air traffic into my own thing. And that's when things started to really compound quickly.
Yeah. So early on,
Mhm.
most people gain knowledge through dummy tax, right? Getting
Yes.
in the wrong deals or, making a mistake.
Yep.
Did you
I made all the mistakes.
all of them?
Oh, all of them, man.
What are some of the typical mistakes like a rookie would make saying, "Hey, I've got some money and I'm just like a cat in heat. I want to jump on some deals because it just sounds sexy." Really,
Yep.
I think 100% of people that are business owners want to get into real estate in some way, shape, or form at
Mm.
one point.
And it's not passive at all.
You know,
It's funny because, like, when you read all the
you're just
books,
killing everybody's dreams,
when
bro.
you I know, when you read all the
Like,
books, you listen to Bigger Pockets podcast,
yeah,
the
easy.
dream is, hey, 4-hour work week,
Yeah, yeah,
it's passive. Dude, it's nothing passive. Like,
yeah,
the only thing passive about real estate investing is if you're investing passively, but other than that,
yeah.
it's not passive. And so,
Somebody's got to be managing it. Somebody's got to deal with the problems.
even if you have a property manager, like, you are still you're managing the property manager, there's
Yeah.
asset management, there's a lot of decisions that need to happen. But the biggest mistake that you could make is probably overpaying for a property or having the wrong property manager. Luckily, I knew how to analyze these deals. I spent a lot of time doing that, and I always bought good.
Yeah.
That's one thing I always did. I was below
So
market.
when you say you
and-
bought good and you were below market, how did you like? Were you just sitting on Zillow or like
Yeah.
where were some of your sources when you were that young and you maybe didn't have as many resources?
Looking at sales comps is one. So there's a platform out there called CoStar, and CoStar is a commercial real estate software. So any asset class in the entire United States, parts of Mexico, even Canada, any commercial real estate asset class, retail, office, hospitality, mobile home parks, multifamily, you can find those assets on CoStar, all the data, what the comps are trading for in your
Yeah.
area, all that history, owner information. And so you can look at the comps. And so, you always want to look at a comp set whenever you're looking at any real estate deal, and make sure you're buying a deal that's valued correctly. And then obviously knowing how to underwrite and analyze a deal. And so first deal was 11 units. And it's crazy to think about, like, looking back, 11 units in Cincinnati, multifamily for $350,000,
Did you ever go out and look at it?
$33,000 a door. It's funny, that deal, I didn't even go out and look at it.
Yeah.
I bought it sight unseen.
Yeah.
I still own that deal today, and the broker of that
So
deal
cool.
now invests with me.
Yeah. That's
Yeah.
so cool. So what made you say, because most people think that they have to get into single family stuff, long-term Airbnb or whatever. You just decided to go directly to multiple units, that 11 unit right off the bat. Has that been the theme ever since? I mean, obviously now you're doing, boutique hotels
Yeah.
versus, is that like a long-term family rental, like the 11 unit one?
Yeah,
Yeah.
it's 11 units, C-class workforce housing, in Cincinnati. And then right after that, I partnered with two partners, and we all cashed out our 401ks, and we bought this 32-unit multifamily deal, also C-class, in Indianapolis. And those are the first two deals. And then I was out of money. And the reason I went a little bit larger is because I was reading a lot of books, and I was
Yeah.
educating. And the more books I read, the more I realized, like, you don't need to start with residential single family. You don't need to start with fix and flip. You can go a little bit bigger. But the
Yeah.
real reason is, with commercial real estate, once you understand how they're valued based on the income approach. And so the more I can increase the income, the more I can decrease the expenses, the more I can force my appreciation, allowing me more control over the valuation of the property. You're not tied to the ebbs and flows of the market cycles.
How did it go from me just handling my own deals, replacing my own income, creating the freedom for yourself, to now trying to help other people do the exact same thing?
What I did simultaneously when I bought these first two deals, and this is probably maybe the most impactful thing I've done in my real estate investing journey, my entrepreneurship journey, and I think it's a good takeaway for your listeners, is I started a podcast. And
Oh,
I didn't know anything about real estate investing, apartment investing. I started a podcast in the apartment space with my old two partners, and literally we just started interviewing apartment investors, people that had a lot more experience than us. And I legitimately just asked them questions that I had about the game.
Wow.
And one of the early episodes, two of the guests, two brothers, who are out of Charlotte, own about 6,000 apartment units. They've been in the game for a long time. We paid them to mentor us, and that mentorship paid.
Paid dividend.
Oh,
It's
it paid off.
it's still paying now.
It is still paying.
Yeah,
It
yeah.
paid 100x. And so not only did they mentor us how to do bigger deals, how to raise private capital, but they co-sponsored a couple larger deals with us. And I always say, like, if you're going to go raise private capital, you want to make sure that you're being a good custodian of other people's money.
No doubt.
So, one, go learn the experiences, go get punched in the mouth with your own money first. But if you're going to go raise money for the first time, the best way to do it is to partner with someone who's successfully done it
Yeah.
many times.
Yeah.
And so we partnered with them, and we did 2 deals with them, larger deals out in North Carolina, Greensboro. We still own those 2 deals today.
It's cool.
And that was my first kind of like taste of raising private capital, doing bigger deals, brought a lot of friends and family into those deals. And since then, in 2022, the multifamily market kind of started to get very overheated. A lot of money was chasing the same deals. Cap rates were at an all-time low. And I kind of saw the writing on the wall. Those deals just became less and less appealing from a return standpoint. You're underwriting the deals, like the numbers don't even make sense. And groups are overpaying $5 million, $7 million.
People are just slapping a large figure because the inventory, and people were just buying it up, and they're like, oh, let's sell this $4 million property for $5 million and see if somebody's dumb enough to come in and swoop it up. And
Yes.
there were many people that probably did that.
Yes.
And
so-
drove prices.
And
through the
so
roof.
2022, I was creating this team of like a small team on my own of managing my short-term rentals and third-party short-term rentals. And around the same time, I saw what was happening in the multifamily space.
Yeah.
And I thought, okay, well, I already have investors in multifamily. And I already have the fundamental baseline of like how to put together these larger commercial deals. And I already have this property management company. And like, what if we just go do a small boutique hotel?
That's crazy.
And I saw what was happening.
See that like that. That's incredible foresight.
And I saw what was happening with the Airbnb regulations, right? New York City banned Airbnb. We saw what happened in San Francisco. We saw what happened in Los Angeles. Happened here in San Diego. Very tight Airbnb regs here. They slashed the supply. And so this phenomenon has been happening across the country for the last few years. And so, I thought, you know what? Like, that's probably going to bring more demand to the boutique hotel. And so I thought, well, what if we go do a small boutique hotel? So bought the first one in 2022, 10 units, beachfront, up in Northern California from a mom and pop owner, and bought this thing for 1.5 and some change, literally on the beach in Northern California. Gorgeous black sand beaches, area called Shelter Cove, hiking trails, gorgeous sunsets. This was the only piece of real estate they had owned. They owned it for 18 years, never exceeded $180,000 in gross revenue. We took it from 180 to 600 in 12 months through better operations, better marketing. All they were using was a direct booking site. They weren't even on these OTA platforms like hotels.com, booking.com, Expedia.
Wow.
We turned on those platforms, better marketing. We did a nice renovation and took the revenue from 180 to 600, and it appraised 12 months later. We bought it for 1.5. 12 months later, it appraised at 4.5. And I said, okay, let's go all in the fund. Yeah. So I started a fund. And simultaneously, while this is happening, that first hotel deal, I realized that I was no longer aligned with my first 2 partners that we cashed out our 401ks with. We were all air traffic controllers. We got into the multifamily thing, and it was a successful partnership.
Yeah.
We got out of our day jobs, but I realized that I was no longer going to reach my full potential under that structure. And I think that's part of like growing as an entrepreneur is you realize that like, you're not always going to be aligned with everyone, and the people that you align with 1 year for one part of your journey might not mean you're going to align with them, the next
It's not even might not, bro. It's gonna happen.
Yeah.
Like, to say they might not, it's like it's not if. I believe it's when. It's very now. There's maybe a 1% that 20 years, 30, 40 years, unless there's like brothers or something that was handed down. Like, it's very rare that you have partnerships last, 30, 40 years, unless, unless both individuals aren't looking to excel past that, or both individuals are looking to continue to excel.
Yes.
But most people find a comfort level, like a threshold in which they get complacent. And then somebody else is like, yo, I want to keep doing things. I want to continue to expand. And then there's obviously that friction that it starts to end up happening when the visions start going. So do you still have your partnerships on those other deals with them? And then you just kind of set up new entities doing your own projects?
Yeah, I still own 2 pieces of real estate with them, and the co-sponsors out in North Carolina.
What
We
does
have- we have a
co-sponsor
good-
mean?
Co-sponsor just means like, okay, so you have a general partnership,
Yeah.
and you have a limited partnership, right? So the investors, limited partners. The general partners are, the ones that are in charge of decision making. all the operations, making sure the deal is successful. So a co-sponsorship or a co-GP just means you have multiple general partners in the deal. Versus here with Summers Capital now, like we're the sole GP, we're the sole principal. We don't have co-sponsors, and so
Make it easier, just decision making.
decision making is a lot easier. And so,
Speed of decision.
oh man,
important.
we can
Yeah.
move so much
Yeah.
more quick. And
Yeah.
and I think the one takeaway for like your listeners with in regards to partnerships is, it's three things for me when I'm looking for a partner. One, obviously they got to be a good human being. If they're not a good human being, I'm not going to do it. Number two, because brand and reputation is everything, right?
Oh yeah.
Number two is they got to have a complementary skill set. So if you're investing in real estate and let's say you're great with people, you're great at talking to brokers, sourcing deals, raising capital, that's one hat. And typically if you're good at sourcing deals, you're good at talking with brokers, you're good at raising capital,
Yeah.
and you're good at marketing and all that sort of thing. You can be the face. But the other side is like, hey, you still need someone to do all the back end, the asset management, underwrite the deals, analyze the deals. Those personalities typically don't love to be like forward facing.
Yeah.
And so if you're good at, the latter, well, then you should not partner with another person that's good at the latter. You should find someone that's great at raising capital, finding deals.
It's the right hand.
Exactly.
You don't need two right hands.
Yes. But then number three that a lot of people don't talk about is I think you got to make sure that your partners align in terms of a similar level of risk tolerance. And that's what plays a role into decision making and how fast decisions can be made.
Yeah.
You know this better than me. Like in entrepreneurship and in this game that we're all playing, there's a lot of decisions that need to be made, and there's a lot of fires that need to be put out daily, and sometimes hourly.
Yeah.
And so we don't have time to sit around for 4 hours, 8 hours a week to make one decision.
Yeah.
Like we have to literally digest something that's going on, analyze it quickly, and then make a quick decision and live with it, and be okay if it's the wrong decision.
Yeah.
And know, hey, if it is the wrong decision, we have the resources, we have the wherewithal, we have the team to pivot again, and we'll figure it out and we'll learn from it. But ultimately, you have to have the confidence to make a decision with a little bit of unknown. And it's all calculated risk, the game that we're playing, right? And so, we're making a decision based on the best calculated chance that or probability that it's going to work out, right?
Yeah.
And that's all it is. And so, in this particular partnership, every single decision was like a 4-hour grueling meeting, 8-hour grueling meeting. And I'm like, dude, you just can't grow into that.
My opinion is that my opinion. So it's like, now you're in a room where you're filled with people that are selling each other on each other's opinions.
Yes.
And then it could get, you just get locked in a non-decision, and it's like wasting time. Yeah.
And so now that I'm, on my own, like I got an amazing team, and I give them I empower them to make decisions on their own. And I'm like, guys, I don't care if it's the wrong decision. Let's just make a decision. Let's roll, and let's just keep moving. And so in the same time, other people might take an entire week to make one decision. We've made 100 decisions in that 1 week.
Yeah.
So if you think about the growth compounded over weeks, over months, over years, that is the difference of someone playing college basketball and someone making to the pros and becoming Kobe Bryant, Michael Jordan.
Yeah, there's no doubt about it. So after being in it this long, do deals find you now? You know what I mean? Like, do people reach out to you and say, hey, I want you to look at this deal, or, and then you're like, oh, I like that. Or are you still actively, got people on your team that are searching for small boutique hotels, or
you definitely are. This game is all about actively sourcing. Like it's a numbers game. You got to have a lot of reps, a lot of at bats, and you might look at 150 deals before you find one. But the cool thing is the more track record you have, the more relationships that you build, the more brokers, the more the industry sees you, other sellers see you as a closer, someone that can perform. The more deals that you're going to get sent your way. And it goes full circle with investor capital, deal development, all that sort of stuff.
So do you ever do some of the creative financing stuff with some of these boutique hotels? Like, hey, we'll pay you out over the next 10 years or something like that. Have them be their bank?
So we'll always look for seller financing opportunities on the front end. The cool thing about boutique hotels is, there's 40 million baby boomers retiring in these next 5-6 years. It's estimated that about 25% of the hotels out there that are valued less than 10 million are owned by these retiring boomers. And so this asset class within real estate, for whatever reason, is probably the most common asset class to find seller financing. If we can't find it though, We'll use bridge financing on the front end,
Yeah.
and that's typically just short-term debt. But they'll give you some construction money, some renovation money, and you won't need. You can buy an underperforming asset that's not stabilized, add a lot of value, and then you can refinance into some perm debt. So that's kind of the model there. But big picture, in our first 10-unit deal that we bought, that was kind of the proof of concept. And so since then, started a fund. We're acquiring our 5th asset Friday this week. In the
I'll tell you
fund.
what, dude, it looks cool on Instagram.
Thank you, man. I appreciate
Yeah, it's like he locked down another one.
Yeah.
You know, so keep posting that shit because
Thanks,
it's
dude.
really, really cool. And I know it's motivating to a lot of people. I
Yeah.
just like seeing people just do cool shit. And
Yeah.
it seems like you're doing cool. Who the hell does your design? Because it's like you guys absolutely like obviously you're doing remodels and somebody's in there doing the design of all this. Do you use the same person every time?
We use the same design team, the same
Yeah.
contractors.
Do you have
for
those in-house?
all of our projects? No, not in.
No.
We use third parties. So
Gotcha.
I have a good crew out of Phoenix.
Gotcha.
And these contractors literally they'll fly anywhere in the country where I have a project, and they'll literally have their guys, their crews
Hunker
they
down.
live on the hotel and just bang out the project. And so it's a good relationship that we have with them. And then, you know, really the theme of everything we're doing, man, is we're just taking advantage of all these tightening Airbnb regs. And so the more this happens, the more these boutique hotels are going to benefit by that.
Yeah.
But even more importantly, dude, is like all these tens of thousands of Airbnb investors that are out there in the country, as more and more markets become oversaturated and regulation continues to happen, these tens of thousands of Airbnb investors are looking for that next thing. They're looking for that next thing. And so the next natural progression for them is to get into boutique hotel investing. And when I got in the game 3 years ago, there was literally no books on it. There was no content on it, literally nothing. And so now people are starting to talk about it more. But I believe, and I'm speculating, and I'm always willing to be wrong, but I believe in 3 years, 4 years, 5 years time, it's going to be the next big thing. And so that's why we're kind of going all in on it right now. And the last thing I'll say is this: all these demographics right now, the millennials and even more the Gen Zers, they don't want to go to these chains anymore. They don't want to go to the Chili's, the Applebee's.
They don't.
They don't, and that's dining. But also when they go travel, they don't want to stay at these big chain hotels.
Yeah.
They want to stay at these one-off, unique experiences, and they want to go share these unique experiences with their friends. I had a demographer on the podcast, and he wrote the book Big Shifts Ahead, and he labeled all these generations based on the decade they were born in. And he labels like this kind of like the people that were born in the 90s, even the 2000s. He's labeling this generation as the sharers, because they want to go experience these unique experiences, whether it be restaurants or like really cool like properties to stay at, and they want to share it with their friends on Instagram. And that's really the generation, right? And that's the generation of the modern traveler. And so you're seeing a lot of these big chains now, these more institutional groups like Hyatt, for example, Marriott, they're going and picking up collections of boutique hotels from private operators, portfolios of them. And you go stay at these properties, you won't even know it's a Hyatt, because they also see the trend that's happening. And so for us, big picture, this fund, I'm going to put 10 boutique hotels in it. We're going to, be able to buy them, at a discount, because we're buying these smaller hotels. And that's not attractive to institutional capital, because the dollars,
It's too much work for.
It's too much work.
They want hundreds and
for a
hundreds.
the check size is too small.
Yeah.
But if I can stabilize 10 of them, I can renovate them, I can stabilize them, I can operate them all together as a portfolio of 10. Now I can package them up down the road, let's say
Gonna have
8 to
even
10
more
years down the road.
valuable.
Exactly. And now I can go into the marketplace and find an institutional buyer, a REIT, more institutional group that will pay a higher dollar per door,
Yeah.
a lower cap rate on the exit because of the economies of scale. And a lot of these groups, they don't need to drive double-digit returns for their investors. They're just looking for a slow, steady, single-digit returns, but not a lot of like renovations, a lot of like upkeep, just very simple, stabilized stuff.
Yeah, steady check.
Yeah.
I've noticed that too, dude. As I told you, I live up by Zions National Park, and it's like these are more Airbnb stuff, but they're all building them like it's not a house.
Yeah.
They do a fucking teepee.
Mm.
It's literally a teepee, and you look at it during peak season, they're renting for $600-700 a night, and it's like somebody's over here $1 million into a house trying to get $600 or $700 a night, and they put a teepee there. There's ones that are a wagon, like a covered wagon, like the Pioneer, and they rent those for $400 to $500. I'm like, somebody's over here spending 50 grand to be charging $600-700 a night
Mm-hmm.
just because of the experience, just so that people can take pictures. That's why I asked, who does your design? What you said was spot on. The whole restaurant thing. It's like anytime you're out of town, you're like, let's look at something that's a mom and pop, like where you know that they actually put love and care into it.
Yes.
Because you could feel it. It's different than walking into an Outback or a Applebee's or
totally.
Chili's or something.
If you go down India Street right now, there's 30 of
Which
the
is
best,
right down the street here?
30 of the best restaurants in San Diego. There will be not one chain, not one franchise.
That's what I love.
Yeah,
I love
and that's where
like that.
everything's going. So anyhow, long story short, we bought this property in Lit Italy, the hottest neighborhood. Old, tired, literally a 1-star hotel when we acquired it. Had bed bugs. They had squatters when we took over. It was disgusting. We put,
Which is a good thing for you.
yeah, it is a good thing.
It's
'Cause,
disgusting.
The money's in the dirt.
Penciled out.
The money's in the dirt. So the bigger the problem you can solve,
The better.
the more the higher the potential return, right? So we did a $1.4 million reno redesign, and we made it vibey and made it super cool. We'll do like influencer stays and collabs there, and
That's cool.
we actually just partnered with a local artist here in San Diego. She did this badass custom mural in the courtyard area. Because this property is on Grape Street, it connects the San Diego airport to the 5 freeway, 27,000 cars that drive by this hotel every 24 hours. And so from a marketing perspective, now we got this dope mural. And so it's just going to get a lot of eyeballs.
So
from
people
people.
just pull up, take a picture next to the mural, that type of shit.
It's just finished. She just finished the mural. So we're going to have a little like mural kind of neighborhood like reveal, kind of like wine tasting party, like fit investors and stuff like that. We'll have that sometime next month. But I'm excited to see kind of what it does. It definitely is going to be more iconic than.
So you don't ever plan on doing like big purchases in terms of hotels, like 100 rooms, 200, like big stuff. You prefer the boutique?
Right now, I see that
Yeah.
as the opportunity. I'll tell you why. It's
Yeah.
because the sub 10 million, and I just had a hotel appraiser on our hotel mastermind call yesterday, and I confirmed this with him also.
Yeah.
He's appraising all sorts of different hotels, but sub 10 million, that's where you'll see these big deltas and these big gaps in terms of like underperforming. You can buy them at a certain level underperforming, and then create a ton of value through the value add component. Because you're dealing with a less sophisticated seller,
Yeah.
a more mom and pop seller where they're not utilizing any technology, no marketing, they don't understand social media,
Yeah.
they don't even understand how to put a lot of these rooms on these OTAs like the hotels.com, booking.com, Expedia. And so there's a big gap and a big delta so where we can create a lot of value, but also, also in that greater than $10 million price range, you're dealing with a more institutional type of seller and operator to where they've pulled a lot of the levers already, right?
Yeah.
And so I can buy sub 10, add a ton of value. Those deals are not attractive to the more sophisticated buyers, but if I can package up 10 together, now I can attract an institutional group. Well, they'll pay a bigger dollar amount.
Yeah. So you found the gold vein right there, kind of in the middle, not below where it's the Airbnb single family stuff,
Yes.
but it's not the super high. So the super, 2, 3, 4, 500 rooms, those are people with billions of dollars or hundreds of millions that are going in. So that's what you're talking about in terms of being competitive, right? You're betting against a bunch of people that have endless amounts of money. And on the low end, everybody that wants to get into real estate is trying to buy the next Airbnb for $1 million. And then you found the sliver of the boutique hotels that's not widely known about, but not highly competitive just yet. But
Just yet. But give it 3-4 years.
yeah, well,
Yeah.
give it more podcasts like this, and you're going to make somebody's mind start turning a little bit and probably try to copy and paste. And, next thing you know, 3, 4, 5 years, as you're saying, you're going to be betting against some people that you probably ended up teaching, on some of those boutique stuff. So you don't care where the boutique hotel is. You'll
No,
look
for-
all over the United
No.
States or even
No, we're-
outside of the United
We're
States.
hyper local. So
Okay.
we're only California coastal. And
Gotcha.
the reason for that is
Gotcha.
most real estate investors, whether they're long-term holders or multifamily, a lot of them look in these landlord-friendly states like Texas, like Florida,
Yeah.
like Arizona, because they don't want to deal with squatters and landlord-tenant laws. I get that. But with the boutique hotel game, we think opposite. We like the bureaucracy, we like the red tape. And so some of these more liberal areas like California bode well for boutique hotels because there's a lot of regulation
And they don't want to jump through it.
against Airbnb, which is
Oh,
bringing
gotcha.
more demand to the boutique hotel.
Gotcha.
So I own a luxury Airbnb in Scottsdale that does very well. I never want to own a boutique hotel in Scottsdale, Arizona, because I don't want to compete with the 6,000 other Airbnbs out there. And so here in California coast, like there's so much regulation. And so there's a very tight Airbnb regs. And so that's bringing more demand back to the boutique hotel. But also, these areas, California coastal, traditionally, I mean, you go back, almost a century, people always are going to want a vacation here. But the real estate here
Absolutely.
organically just appreciates and it appreciates and appreciates. They're not building more land on the beach.
No.
Yeah.
It's
And
done.
so all of our stuff is either on the water or
Or-
just off the water in like A+ locations.
Gotcha. So with the boutique hotels, are there any, they're all just like regular hotel rooms, like the sizes for the most part? Are they a little bit bigger? Is there like double room type stuff? Or do you just put like a king bed in every single room? Or, like what if a family wants to stay there? Do you have stuff like that where there's got a couple queen beds or something like that?
Yeah, it depends on the property, but we
Yeah.
typically have like a good mix. So we'll have some single kings that are nice. We'll have some suites. We'll have some double queens.
Gotcha.
We'll even at some of the properties we have like some really nice suites that might even be 2 bedroom with like a couple
The
beds.
mini apartment almost
You know,
for 'em.
So we have some of those at like some of the properties as well.
Did you do that in your renovations, or were they already like that in the renovation, was just kind of updating things?
That's a good question. A lot of those were already there.
Yeah.
And so another thing is like the innkeeper suite. So a lot of these smaller hotels traditionally have an innkeeper unit.
That live on the property.
Yeah, and a lot of these units are typically the nicest unit. They might be 2 bedroom, with a full living room, full bath, etc.
Yeah.
And in today's age, you don't need an innkeeper that's going to live on the property, right? So we'll renovate that unit and we'll bring it online for additional revenue. And so that would be like our kind of our penthouse unit or our suite, if you would.
So do you guys manage and hire your own employees that are at the front desk? Is there a front desk,
Yeah.
or is it like the key code thing?
Yeah, that's a good
sorta?
question.
Yeah.
So at the smaller hotels, we'll do a self-check-in, self-checkout model. Like the first one we bought, 10 units, beachfront,
Yeah.
garden style. Guests don't need to go through a lobby to get to their unit. We don't need a front desk at a small hotel like that. And quite frankly, a guest at that type of property where they're up there traveling through the northern central coast, they're hiking. It's a lot of like solo travelers, younger couples. They don't need to talk to a front desk. And so we do a self check-in, self checkout model. The Google reviews on that property, you guys can look it up. Black Sands Inn, 4.9 Google star average rating. And so there's no one at the front desk. Now the larger hotels that are 20 units to 50 units, those ones all have a front desk, sometime even general manager, some sort of on-site staff, and we'll have a little bit of maintenance at some of the properties, just to kind of add that additional touch, just to make sure that the guests have a good experience when they're checking in, checking out.
And I saw some of your returns on one of your properties. Like investors are getting 25% returns or something on one of them. I don't know which one that was, but you probably can't do earnings claims when you're raising money, or can you do that? Like, hey, these past properties.
So we have
blah blah.
we have a
you know.
506c fund.
Yeah.
And so when you guys, if any of you guys raise capital for real estate, in the eyes of the SEC, you can set up a 506c or a 506b. And the 506b allows you to bring in up to 35 non-accredited investors, friends and family. There's no income or net worth threshold, but you can't market or solicit the deal. And so in that type of offering, I would not be able to go out and talk about the return profile. However, ours is a 506c. And so we can market, we can solicit, we just can only bring in accredited investors. Accredited investors is someone that earns over
50.
over 200 a year for each of the previous 2 years, or has $1 million net worth.
Yeah.
And so, so I mean, a couple ways to get a hold. So if you're listening to this and you're like, hey, like I really want to learn how to do this actively, you can go to hotelinvesting.com. We got a cool community, 85 members, 45 hotels owned collectively. We teach a lot of the how, but if someone's listening to this and you're like, man, you just want to put your money to work, we do passive income, tax benefits, and really cool stuff that we do for our investor community. If you want to get involved, you can go to summerscapital.com/invest.
Bro, I appreciate you being on the podcast, man.
Yeah.
It was super cool. It's a totally different, industry, totally different conversation that I normally have. And it was really educational for me, which is always fun to have those podcasts where I'm actually learning
Of course,
along with
man.
the listener.
And
So,
very excited to flip the script. You're about to come on my podcast as well.
Yeah.
Rich Summers Report. You got to check out Trevor. We're gonna be dropping that episode here in a little bit. But
So it's Rich Summers Report is your podcast, right?
yep.
So go check out his podcast. Per usual, make sure you guys are rating and reviewing the show. Share the show with somebody that you love and care about that you know would receive value from it. Other than that, keep kicking ass, and we'll see you guys next week.
Let's go.